How's it going, traders? The Forex Amateur here. Welcome back to my YouTube channel. I hope everybody's having a great day, great week, great month so far. So this is another quick video, obviously building up on the concept of market structure that I started earlier in the week. So we've spoken about market structure in general. We've spoken about bearish market structure. So you guessed right, today's video is a quick 5-minute video about bullish market structure, right? So very quickly, let's define what is a bullish market structure. So how do we identify bullish market structure? Like I spoke on the bearish market structure video, there are 3 simple steps that we use to identify and validate market structure, right? Whether it is bullish or bearish. The very first characteristic of a bullish market structure will be the market making higher highs and higher lows, right? Sorry, higher lows and higher highs. Right. So the market making higher lows and higher highs. So the moment we identify, like I said, this is an identifying characteristic, right? The moment we identify that the market is making higher highs and higher lows, we are able to now be on the basis of this market could be bullish. However, this does not bring us to the point where we are able to what? Where we were able to execute on trades, right? We need to obviously go over and above this in order to verify that, okay, this is a bullish market, but at what point do I position myself in order to take a trade, or at which position do I place myself in order to take a trade? So the second characteristic that we would focus on, and this is obviously a verifying characteristic, will be breaking previous highs, right? So if the market is breaking previous highs, we are able to, at that point, something looks wrong here. I think it's GHS. Yeah, breaking previous highs. So the moment we are able to see that, okay, this market is breaking previous highs, this is now the first thing that verifies that we are still in a bullish market, right? Even so, we still need to go one step ahead of that, and we need to be able to say, okay, now we are confident in saying that this is a bullish market structure. It is breaking previous highs, but what else does it need to do in order for me to say, okay, this is my point of validation? If it does not tick this very last box, then I am no longer going to assume that this is a bullish market structure, or I'm no longer going to forecast that this is a bullish market structure, and I'm more likely going to start looking for bearish market structure, right? So what is that last characteristic I'm talking about? Very simple, respecting previous lows, right? So that is very simple, very straightforward. As long as the market is breaking previous highs, number 1, and respecting previous lows, number 2, those are your 2 characteristics that would verify that you are still in a bullish market. Obviously, number 1 will help you identify that it is a bullish market structure, right? So bullish market structure, that is it. The moment you look at a chart in a specific instrument, whatever it is that you do trade, whether it's stocks, cryptos, Forex, indices, whatever it is that you do trade, futures, commodities, whatever it is, right? So you look at the market and you see, okay, apologies for my drawings, as you know, I'm not the best at that. So you look at this market, and what do you identify about this market? Number 1, that's a low, that's a high. So we know that this is now between here and here is our range. If the low gets broken, then we're most likely going to be looking at it making a lower low, then look for a lower high, as we spoke about in the bearish market structure video. But I'm not going to go too in depth into that because obviously I'll do a follow-up video on that. This is specifically about bullish market structure. And if it breaks the high, then what's happened? We've now broken the previous high, right? And what will we have formed if we do so? So let's go back to this. So now this is our range. That's the low, that's the high. The moment price pulls back and forms this level, in comparison to this previous low, this is now high, right? So this is a higher low. Price leaves from here, and what does it do after forming this level? It breaks above this previous high. So higher low has been formed. Higher high will now be formed at this point, right? Obviously, so that ticks it. Breaking previous highs, that ticks that point. And then what did it form at this point here? This is a higher high, right? Because in comparison to that previous high, we know that, okay, this high is higher, right? So price has uh, formed a higher low and a higher high, and it has broken a previous high. What do we need to see price doing after after breaking a previous high, forming a new higher high? We need to see it respecting a previous low, right? So as this point here, it's respecting a previous low. Why do we consider this to be respecting a previous low? Very simple. If you compare it to the previous low, which is this one, it has not been broken, right? So let's remove all of that really quickly. All right, cool. So let's go through it again very quickly, right? So we've got this low, that high, price pullback, formed a higher low, right? Price breaks the previous high and forms a higher high. That ticks higher low, higher high. That ticks breaking previous highs, right? So that ticks two of the points. First, our identifying point, which is this one. Secondly, it will be our verifying point, which is that one. At that point, what are we now looking for? We are simply looking for price to be respecting a previous low. So when price drives back from this level, as long as it does not break below this previous low, we are still going to be in a bullish market. All right. Very, very simple. And obviously, if you are not very confident in that, what you can simply do is you can simply mark up this previous high that was broken and mark up this previous low, right? And this now, what does this become? If you are a support and resistance trader, this becomes a level of support. Oh, wow. That becomes a level of support. So we'll be looking to see price, as long as price respects this level, does not drive straight through it. Remember that broken market structure and rejected market structure is very different. And we'll obviously visit that perhaps in another video. All right. So that is all that we have from this point here. We will obviously expect price to keep pushing to the upside. It breaks a previous high at this point. And then what do we identify at that point? Oh, man. After breaking a previous high at this point, what does it do? Pulls back, forms a higher high firstly, pulls back, and it respects this level. So your support level will move from this high, right, over to this low. As long as price respects this zone, we will continue looking for buys, maybe a stop loss below here, entry somewhere inside of here, and we obviously target the first high and then keep holding, or whatever be the case, whatever your management process is. So that's it for today's video. I hope this was a bit more educational for you. If you have any suggestions, remember, about other topics that we could perhaps discuss, remember to drop it down in the comments. Until next time, I wish you a blessed and a profitable trading day, trading week, or trading month.